Hello, good morning. Welcome to another US Futures Trading stream. Today is Thursday, 9:31 a.m. Eastern Time in the US. This is Victor, your host here with another stream. The market, now let's take a look at where the market. I was posting something on Twitter. It just takes so much time, man. We have a spike in the overnight after the weekly jobs report, and the market opened at the lower side of this spike. This is a sign of weakness here in this market. This is the first thing from the overnight. And the second thing from the overnight, we have Settle here. Settle has been taken from yesterday. Yesterday was Settle was being my bad. Settle is down here from yesterday. Okay. The low from yesterday, this is a weak low, and the market settled yesterday kind of like around the previous value area high, previous day value area high here. Now, the market is opening inside previous net range. I was monitoring the market for continuation. Something the market is paying a lot of attention to is this level here. I hope you remember what happened yesterday, but I will talk about this level in just a moment. Right now, we don't have excess in the lower side. This is a weak level. This is a mechanical level from yesterday. Overnight inventory is 100% short. There is an attempt here to do a counteraction to the overnight inventory. Okay? What happens if there is no counteraction to overnight inventory? That's a sign of a weak market. Okay, that's the first thing I am observing here. Are we going to have a counteraction to overnight inventory? If there is no counteraction, it's a weak market. You know, there can be good also market takes this low out, which by the way now is even weaker than it was, right? Because the market has been bought just a couple, basically from this level, basically from yesterday's low. The upper side, in the upper side we have no excess here. Seems like the market just got too long here, and this part up here, upside continuation from yesterday, I mean the day previous, has this level here, this 2 distribution is this distribution here from way back in September 15. Okay, this is the first day of the current contract with high volume. Upside continuation has this high as a next level. Okay, if the market is having upside continuation, we'll take this level. No? It couldn't take it yesterday. I didn't take it the previous day, and yesterday just couldn't take it. When I have something like this, the lack of excess on the upper side, sometimes the market just got too long. It just get too long that it needs to break to rally further. That could have been the case yesterday. There was a trade opportunity yesterday when I see something like this. Remember, context is everything, right? It is one thing, this kind of highs, in a market, for example, like here, right? Maybe here or here. It's a completely different context that we have there. After this big rally coming all the way from, all the way down from here, this could be a sign that the market is too long, that the inventory has just got too long here, man. Now, this was an opportunity here. When market couldn't take this, and it was here, somewhere in here, you got your stops placed here, and E also is a little bit more riskier, could be the word here, but risky because the market can retrace all the way up to here, and still trade could have some odds of work, right? But you would be, or I would be, my position will be underwater for more more time could be more time or more capital here. In this area is better. And the main reason of this was the inventory was too long here, and the market failing to take this high, which is upside continuation for the movement the market was having. Okay, now coming back to this. Yesterday, the last thing the market did, last thing we saw the market doing was having this break. Okay, this break here, this low, unless this high is taken, which by the way is a weak high, unless this high is taken, the action is to the downside. Actions to the downside in a trending market that is trending higher. Momentum is to the upside, everything is to the upside here. The market taking this low out signals the end, okay? Signals the end of the upside trend. If we start from here, one time frame higher, higher, higher. If this low is taken, and the one time frame high is over, we may see some rotation after that. We may see some break. We may see many things. What are we going to see? I have no idea. I try to keep my mind open. Volume, we have about the same volume, a little bit less than yesterday. Look how volume is decreasing here. There's a subtle decrease here. 110, 90, 84. Why I see volume? Volume is very important to me. Okay, just to have the same volume as yesterday at the 15-minute mark. This is my indicator. This is my time. At the 15 minutes mark, right now we are about 8 minutes, maybe. How much? 8:58. 9 minutes. At the 14 minutes mark, 15-minute mark should be somewhere around here. Let's see, somewhere half of this here would be something kind of like around this much, right? Let's see. Right now, the market has opened below previous value area. Below yesterday's value area. Notice what POC is yesterday. This is a white POC. It's very, very, very wide as well, because 1, 2, 3, 4, 5, 6, kind of like 8 levels here. The same wide. The market has taken some or most of the single prints down here. Now, we join these 2 days, we join this one. With this one, we don't have excess in the upper side, we don't have excess in the lower side. Right? What traders are doing here? The traders are buying the dips. Now, the bigger picture, the next level in the monthly, I always try to put trying to do something, imagine things, right? Imagination plays a lot of things. Look at that trend line there. Right? It's being sold right from that level. This is not coincidence. Cannot be coincidence. The weekly, but we have the next level to monitor for upside continuations 4562 in the monthly, happens to be also in the weekly. And what is this level here? 62 as well. Can you see? Duplicate. Let's move this up here. Edit properties. Delete 45 62. What? Name 4562. Alright, this level. It's very visible, right? Right now, after this 44.40, we have in the daily, we have the 44.40 here as a next, immediately next reference. Notice how yesterday the market opens has upside extension. So far, just so far, there is rejection. The question is, can this be excess in the daily time frame? Yeah, in the daily time frame, have a good odds that this could be excess. Now, the next thing I do is I check my market profile. If I look at my market profile, I can see there's no excess here, right? So trading is not performed by people, okay, that is has the same interests, same goals like I do. I am just one participant on the market. There are another people that have another time frame. There are another people that have another interest. There are another people that has way more capital than I do. There are another people, another participant that just buy, which is the investor kind, right? So trying to assume that the market has to behave in one way or other would be assuming that the market is something that we can predict, that we know who is going to do what, and that, as we all know, cannot be done. I think I'm rambling here. Forgive me about if I gave you the impression that that's what I'm doing. Please let me know if I'm just rambling here. Dum, dum, dum. We have an inside day today. You know? This is an inside opening. What are the inside openings? Well, you know, when we have an inside day, the odds of chop and rotation increases. The higher or the closer to the center, the higher the odds of chop and rotation. Yeah. Now, yesterday's settle cannot be taken. Settle now is up here. Right? This level here, as we saw, is this distribution here. And why I do this is because, you know, I treat these days as distributions as two separate days, right? One day ends here, and the other day high is up here, right? It's like this were 2 days. That's what I do that. And that's why also when I see so many distributions like here, okay, this is just very, very emotional market, very thin market here, very thin. And if you put these 2 days together, just guess what you have? You know, a P formation here, right? Very clear P. And the next day as well. What happens if you do this? Oh boy, what do we have here, right? Things like that. So I'm not saying the market is going to break, but you know, the weakness is seller has been taken. Right? We are now back in positive. Everybody is watching the market now has a green candle here everywhere. Right? All the indicators are green now. You have a trending market. Today's couldn't take this level. Not gap guidelines, balance guidelines. You know, when the market comes to the edge of the balance, apply balance guidelines. The market did not get out of balance. You know what this could be? You know, this could be targeting the opposite side. Now, a thing also, something that can be very misleading here, is that this could be a counteraction to overnight. Notice how high the market. What is the trend? Trend is to the upside, right? We have a trending market where the overnight inventory is. The overnight inventory is in the lower side. A counteraction, which direction the counteraction would be? The counteraction is in the direction of the trend, right? So we have better odds of having a counteraction, which seems to be the case. Now. Now, taking this level, this is M high, which is also a weak high. Markets tend to repair the weak levels, right? If this level is repaired, which has good also been repaired because it's very mechanical up here, also represents the rejection of the late movement of yesterday's session. Dum, dum, dum. Look at this, huh? Now we got 49 minutes. Very low. This block is going to be lower volume than yesterday. Okay. I haven't checked the other markets. What the other markets are doing? Okay, bonds are kind of take it, have retraced it, and recover from yesterday's break. There was a rebalancing here, that took some of the single prints here. Crude oil. This chart is what worries me. Crude oil. And rally. This kind of rally would be really nice, having gold in the opposite direction. Right, but the gold is rallying as well. Oh my God! Look at crude oil. Oh boy. Man, this is so low now. Look at this. Coming back to this low actually risk. If this level is okay, let me come on, man. This is a very dangerous market, my friends. At this level, this is the break, okay? This is the breakout level. Okay, which is this one. I will put this low here. I don't trade crude, so I don't know what values are, but take it this low here. This is July low. It seems like this was just a rebalancing. This is some short covering here, some rebalancing of inventory. The market was just too short. In this case, the market is too short that it needs to rally to break further. So the second leg, this could be a second leg. If the market comes back inside this big range here, look at what will happen, what you have in the lower side, man. 1, 2, 3, 4 lows coming from the same area here. All right. So, boy, this is a really dangerous market, because crude, you know, even though the situation, the geopolitical situation that we are going through now, if this commodity, crude oil, breaks, it means that there is no buying actually, right? And what happened? There's no buying here, even though the Saudis, the Russians had extended the oil cuts. You know, this can drag them, but this could be a sign that there could be a recession there. Don't know, right? There is some recovery of bonds. The higher this goes, the lower the rates are. Dollar, I mean, dollar is in the center of the range. A cheap dollar is good also for big stocks. I didn't see this. Oh, boy, this is a big break in crude oil. You will see, I suspect that we will see some talkings now about crude. Everybody is very positive now, you know. We have the end of the rally. We are going to have Santa Claus rally. Everything is, you know, as good as it can be. $45.62 is the monitor for continuation. Now I'm going to do something else here, just for the sake. Okay, just want to see something here. Just want to put that here. This could be a breakout. Let's see if the market buys is bought from this in the future. I don't use those levels to trade. The 100 is, I mean, look at this, 1, 2, 3, 4 gaps in the upper side, in the lower side, and all this range here have the 200 as a base. Oh, it's actually, this is a strong base actually, I think. No, it's a better base coming from the 200. There could be some resistance here in this area. All right, let's go back to the market. All right, the market is having upside continuation here. The potential destination of these trades is the opposite side of the range, right? There's no excess. This is a poor high. Most of this long inventory, short-term inventory, has been removed, right? In the very, very short time frame, okay? But now, what can be happening here? You can see, the market traders are buying the dips here. Buy the dip, buy the dip again. This is good volume. This is I think, yeah, this is not bad. All right. Can you see, you know, the market can have a very weak structure, but it doesn't mean I'm going to be short. You know? Use micro generating information. You have a good location here, right? Gap guidelines. No, my bad. Balance guidelines here, right? The market has not taken the opposite side of this range. This was the potential destination of this trade when this market that is going higher here has a rebalancing here. This late movement is rejected yesterday, before yesterday. Okay, upside continuation does not take this high. And when the market comes back inside this previous day range, the potential destination is the opposite side. Could be this one, right? Or could be this one. And that's the potential destination of the trade. Now it has not been completed. You know, the potential destination is not there. It was bought from this guy. Now we have this range now. Yeah? This trade is over. Now we have this day. What happens this day is it started here, it started rallying. What is the potential destination when a market reaches the opposite side of the balance of the range? There could be some back and forth. When the market gets out of this range, you know, the trade from yesterday is still alive, right? And has this side as a potential destination, but right now it's still there. If this high is taken, which by the way is a weak high because the selling came from previous period high, very mechanical here, has good also been taken. And now what happens now, right? Now we have A, M, and L from yesterday that are at the same level. You know, that level is very weak. It's getting weaker now. You know, it was weak yesterday, now it's weaker. Okay, it's weaker. We have two situations, right? Lack of excess here and lack of excess here as well. Okay? Forget about the overnight here. You know, this could also be a counterreaction to this overnight inventory. Notice that most of the inventory was in the short side. So there was a lot of shorts here. All these shorts here can be the fuel, you know, that is, you know, fueling this movement. You know? We have something here. We have inventory that can move, that can be forced, you know, to cover. And that can be this. Right? That can be one thing. Now, monitoring for upside continuation, we see LM taking, this level taking, next one follow. I guess I would see this thing, and next, you know, 915, which is the current movement. The current movement to the outside has this high as a potential destination trade here. Let's see what happened. That's what happened. This is really, I think there's lots of prints here. That's my opinion, my personal opinion. No, we are almost, the first period is almost, notice also volume. You have lower volume than yesterday. Traders are kind of like aware. You know, you have lower volume than yesterday. It's still higher than these days, but lower. This volume is decreasing here. Right? It's still higher than most of the last 10 days. Now they have this high. This level is super weak now. Location, right? This trade here has location. Now you can see the market going higher. If you take a long, if I take a long here, the market can come down all the way down to here and still be an upside market. So that's location, right? The risk that I have here is higher. I have going long here is higher because it's inside this day. This could come all the way up to here, you know, but location is everything. Now I see a market trying to get this. The first has to take this level. This level is now super weak. Right? The market shouldn't have any problems taking this level out. Shouldn't have any problems doing that. Now, checking my histograms. What do I have here? What do I have here? Let's add this week here. Look at this, man. This is the area of volume. The market rise here yesterday. Now there is volume that is being added to this level here. You know, it is nice when the market dries. This is the daily time frame. It's nice when it dries, and this would have dry also. That would be better. The situation is getting risky. You know, I think the long. What I'm trying to say here is the long is very, very risky. You know, taking this long carries. You know, I wouldn't. I would never trade this market without stop. Okay, the stop has to be really tight here. Yes, that's my opinion, my personal opinion. Remember, I don't call trades. What I try to do here is I try to, you know, I try to teach or show some. I try to understand the market dynamics. Doing this stream is very helpful for me. You know, I do as a way to remain focused in the market. That's one thing. And another thing is also to have some form of accountability here. You know? Now the next thing, next level. Right now, how much is this? Maybe 5% lower. Wow, 11% lower. Huh? We have 11% lower. Yesterday, how much lower we had? Like 20%, right? This level. This is still an upside market. What I am doing here, I'm monitoring the market for continuation. The late break is still in place from yesterday, you know, the intraday. The daily has the upper side, okay? This level is very weak here. This also is very weak here. The daily, this is the intraday is weak. The daily are also very mechanical coming from this level here. So the odds favor the upside actually. The risk is high though. If you have any questions, please let me know. Princess Midi, Will Grimmer, Ole, Mississippi, 3882. 38 years old, born in 1982. No, doesn't work. The maths don't add. Italy. Well, there's some people from India, Brazil, Czech Republic, Italy, Portugal. I have something that I have noticed on this market. You know, this is very quite obvious here. There's a lot of trading around this level, and that's why I decided to keep this. Okay, I think this is important. The market is being super hyper focused in this level. In this level, it is using this as a support here. It's using this level as a support. This level here, and this level being support actually targets this thing. The market is trying to get to this thing. It's having some issues now, but let's see, right? Let's see. This is clearly being used as a support. This level here, this day here, this level here, this low, this high, this area here. and it's being used again today. Notice where this high is now. This is very weak, right? This high is very weak. Why you want to be short here? And this is the thing about trading. Most of us traders were caught following price. We usually just follow price. Price is going higher. We cannot avoid to see the market going higher, and okay, the market is going higher. I need to buy here somewhere. And the market is going lower here. Okay, the market is going to break. Finally, it's going to break here. This market is too long. Wow. Blah 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 blah. This trade now, okay, this trade is still following yesterday. This time frame from yesterday is still okay. I was going to say it's to the downside, but it's not to the downside anymore because B has taken A. A would be a continuation of yesterday's, selling from just a couple ticks from this this high, which makes this high weaker, which made this high weaker, and now this has taken A high. So this trend, this short time frames, this intraday trend is over now. The action to the downside has been terminated now, has ended here. Now the next thing is this could have been a counter-action to overnight inventory. Overnight inventory was very short, okay, very short. The market almost took, had retraced the whole spike, all this spike, this is jobs, the weekly jobs number here, all this spike has been retraced. Okay, volume is not bad. Okay, now the upside movement now regarding today's, we have a weak low here, right? Why weak? Because it's very close to yesterday's low, and yesterday's low is exactly at what was settled, previously settled. This is weak. Now notice where B is now. And also hold back. I'm not saying that this market cannot go higher, but the risk here, the risk is very high. All right, and sometimes we will see this market going higher and higher and higher, and say, gosh, this market is never going to stop going higher. So it has to buy here. I will buy here. This is if I buy here, I will need to find location here. This was one opportunity, but usually, most of the times I don't trade the openings. You want to see what the market does, because this can be very misleading. The market is opening inside previous range, which advertise, increases the odds of rotation. The closer to the center, the higher is the odds of chop. This high is weak, this low is weak, this low is weak, this high was weak. What do you do then? I can say, oh boy, I missed this trade, right? I missed this trade. If you think that you could have taken this trade, or if you take this kind of trades, you are one kind of trader. Figuring out what kind of traders we are is also one of the most important things we need to do. We traders do. It's just like in any performing activity out there. Let's take something. Play, let's say take a sport. Right? You play football, you play soccer. You play basketball. Okay. Oh, play basketball. You either play forward, you play base, you play, what is the other name? Wing? I don't know what's the. The same goes in football, right? You are a defensive player, you are an offensive player, you are a tight end, you're a runner, you're a quarterback. What kind player you are? What kind of trader you are? What kind of trader you want to be? What kind of trader you're you are more what kind of trader would be the how can I say this? What are the characteristics of your personality that favors one type of trader over the other one? Also, all of those things, all of these things, we have to see. There's a process of knowledge, of discovery, trying to figure out all of those things. And unfortunately, most traders, most people don't do that. No, people just come to the market. Okay, I'm going to buy, I'm going to sell, I'm going to buy, I'm going to sell. No? And the statistics are not that good. No, in any business, and trading is a business. In any business, there is a rate of failure. What I have learned, for example, any business that is open in the United States, more than or about 80% of the business that open are going to be closed in the next 5 years. Trading is even, the statistics on trading are brutal. Most of the trading accounts that are open last a media of somewhere between 4 to 6 weeks. It's hard to believe that, all right? Because you see in the media, okay, just trade 5 minutes, and make $200 in 5 minutes. Or use this strategy and you will do $8,000 a month. Use or buy this indicator that cost you I sell to you for only $300, and you will make $10,000 in 2 weeks. It's not like that. You can do a lot of money, like in any other business, but like in any other business, we need to put the time here. We need to put the effort here. It just doesn't work. It's not that easy. Nothing is granted, and this is one of the hardest business there is. Okay, 14 minutes mark. It is a 14-minute mark in this period. If there is an upside continuation, usually what I see is at the 14-minute mark, I see a market going to the upside, right? At the 14-minute mark, I should have seen some push to the upside. There's no push to the upside. And we are already around the 15-minute mark, and the market is at the low of the current period. And this is just a technical part of this. This is how we observe this market. Right? But still, it's a market to the upside. This one, because in the daily time frame, this low has not been taken, and in the intraday, this low has been taken. Right? In the intraday also, this action to the downside is no more. This action to the downside has ended, or ends when B takes M high. So there's a lot of back and forth here at the opening. After this tremendous rally that is going on, there is some rebalancing in the odds here. Okay. Take a look at the daily. This we may have excess here. We know that the excess is, This is not that good, but it has a excess regardless. No excess in the lower side. There's the odds don't favor the upside here. Huh? We have a bad low here, hyperextended market. Not. Well, I hope I am repeating myself here. Now, upside continuation, okay? Upside continuation, this high being taken as a stop right there. Will increase the odds of this high being taken today. Now, if this market takes this low out, what can happen? What's the next thing to monitor? What I'm going to monitor for downside continuation is previous day, POC, overnight low, not previous days, you know, what is this? Wednesday, Tuesday, over halfback, which also is value area low under 4,400, and all of these things, okay? All of these things that happened came from the 4,400, very mechanical by one tick from the 4,400. Do you remember? Do you remember when there was a break here, you know, rebalancing here, and all this rally came from this low here? Very weak low here, very weak low here. Remember when we talk on A, or when B started here, when B took A high, and location is everything, this market is still to the upside, right? Notice that the risk here is lower than the risk here. This market can come back all the way up to here and keep going higher because it's still to the upside. The action is to the upside here today, unless this level, this low is taken. Okay, and the risk of taking a long in this area is very high. All right, I can still have my long here. And what usually happens, I have my long here, okay, oh, this market is going lower, I close it, and as soon as I close it, the market goes high. That's because we don't have proper understanding of the market dynamics, okay? Location is one important thing, right? Remember, something to monitor at all times is continuation. What the market, first trying to understand what the market is doing, okay? What the market is doing. Once we figure out what the market is doing, try to get in sync with the market. If the market gave us an opportunity, okay, seize the opportunity, take it, and just take my chances. This is the 14-minute mark. Okay, we see the last 7. Still 10-20. This low is going to be 1, 2, 3 here maybe. Okay, there's no taper here, but this is, just look how it price here. 8. This could be something here. Look at this thing. Market profile traders use this to go long here. You go long here. You see this 8 single print here. I mean single what is the single unit contracts. Take a long here, and your stop is maybe 2 ticks here, or maybe a couple ticks below this low. A good location. What the market, what traders are doing here? We are buying the dips, right? That's what traders are doing. What I will have here, this is 44, 12, 15, 15, 11. Yeah, right? $22. If the market comes back all the way up to here, okay, I would see it as a sign of weak. The movement is getting weaker. Okay, because it did not the late push, the last push, there was not an intermediate push there. There was the first push between the first seven, within the first seven took previous period high, but then I should have seen something here pushing around the 14 minutes mark. That didn't happen. And if the market comes back all the way up to here, right, next period opens somewhere up here and takes this high out, I would label. I guess I don't like that expression, but for me that would be a really weak sign. Kind of like the market getting long here. This low, in the same way how when A was sold from this level very close to this M high from the previous day, A coming all the way down here and being bought a couple ticks from previous day low actually weakens this low here, you know, which was already weak. This was a mechanical low, and this is adding weakness. And now we have this level, a couple ticks from the low, you know, one tick from last, you know, the actions to the upside. But there is a lot of back and forth here. There's a lot of chop, a lot of rotation here in this market. Now, we talk about how market profile traders took when they see this kind of activity, single prints here. There's kind of like a automatic, in this case automatic long, right? Because dry single prints, boom, go long. You know, and you can see now the market is struggling here. If you know, because you saw something here, right? Going faster to the upside. The tempo was good to the upside, boom, 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 and now it's stalling here. The thing is, where is it starting? Around the center, right? Around the center. The market is building value around the center here, which is the center or below the value area low here, kind of like overlapping here. No, value is overlapping yesterday. It's kind of struggling. To me, it's struggling here. Now we are in the last 7 minutes before the period ends. As I say, if the market takes this high out, I would take that as a weak rally here, a weak market here. Momentum is still to the upside, as you can see, as everybody can see. Momentum to the upside. This low was weak. This also is weak. This level is getting weaker now. The sooner a market gets wide, like 3 or 4 periods wide, sorry about that, you know, early in the morning, you know, the odds of having a directional move decreases. You know, the odds of having a rotational market increases when that happens. In this case, the odds of having a big rally or a big break decreases when we have something wide here early in the morning. Notice that the range of B is almost the same as the range of A here. Look at this, 10,000 here. We had 10,000 over here as well. Around the same volume here. Oh boy, sorry about that. Oh, look at this. We can have some taper here? This is the daily profile here. Is this or this? Come on. Oh yeah, this. We saw bigger volume here, right? No taper here. But when we put these two together, market comes lower here. I can't just try here. It's too early in the session to see anything. The other rotational market are high here. Value is lower, overlapping to lower. It seems like the market is going to open inside previous period. No, my bad. Around previous period, half back here. You have some movement here to the upside, right? The pace was good here, right? Now market is struggling here around the center of this range. I wouldn't be surprised if the value starts builds here. Now overnight POC is very prominent, which also tend to attract the market back and forth a couple times before any directional movement. This is spike. As this spike being rejected, I think no, this is neutral here. This market is neutral. I will forget about now. I can forget about the spike. Focus on. I think there's some good rebalancing of the overnight as well. Yeah, some good rebalancing of the overnight inventory here. And now I can focus. On. There's some. Yeah, I think I would consider overnight session rebalance now. Now I will focus only on the previous days. Oh my God, it's even lower. This is going to be even lower. Volume is decreasing here. How much? How much is this? 10%, right? Around 10%. Let's see. Was 11%. See. Oh boy, 14%. Volume is decreasing here. Look at that. Pay attention to that. Market is going higher, but volume is decreasing. There's a nuance here. Everything. There could be something here. There can be something here. Yes, sir. What is going to be? I don't know. Well, another mechanical low. This high. Boy, this would be really good if the market comes somewhere up here and then just. But the thing is, now we have 3 periods wide. Remember what happened when we had 3 periods wide, you know? The damage the market can do is limited when we have this kind of action here. The race to the upside is super high. Now, having no excess in the lower side, having no excess and having upside continuation towards this high, boy, I guess long would be the last thing I would want to be. Okay, I acknowledge the momentum is to the upside, or there's market that is trending higher, but that would be, I guess I wouldn't be trading futures there. Maybe another. Look at this single prints again. Another 6 here. No, it happened here. It happened here. Now they're buying again. Boom. Single prints. Let's buy there. Traders do what works until it doesn't work anymore. This market is getting extremely long here. But I am not going to fight momentum. I'm not going to step in front of any freaking trend here. Freaking trade here. You know, sometimes, you know, we saw this tremendous amount of weakness going on, but the market needs something. All right? Usually there's a catalytic there that triggers the liquidation. Now look at this. This is tapered here in the upper side. This is tapered here. Continuation here. Taking this taking settle here, right? Next thing in the lower side, this low, but still this is an upside market here, right? So going short here is kind of like being, you know, in the innovator side here. Because the market is to the upside, everything is to the upside, everything is to the upside. And sometimes it's better to be a little bit late than too early. Seems, can you see what's happening with value? Value is moving higher. It's about to get inside yesterday's value. There's a lot of rotation here. You know? There's some selling here. Alright, seller has been taken. Again, traders are buying from this level. From this area, right? Which is yesterday's area, which is every time the market gets closer to this level becomes weaker and weaker. Now the action is to the downside now. very low volume. Volume market going higher, volume decreasing here. Now we are getting back inside this area here. Market gets inside this, could target this 45, the 4500 actually. Now the innovators have the seller as a stop. It's kind of like, you know, this has to be really fast here. You see taper here in this period, and now we're having taper in the lower side as well. The daily is also having some taper here. The market could have a spike here, boom, and then a violent rally. Now this is taper here. Notice how volume dries here. The daily also dries here. You know? Where all this movement started. Okay, that's the thing. What do you have? What we have observed here? You know, weak coming from halfback, right? You have a buying here and stalls around the center, fails to take this high. Now we have an action to the downside. The field 7 has take this low. Now in the next 14, I would like to see some downside continuation, not another push here to the downside. This could be a pullback. You know, I would like the pullback not to take sell. Monitoring the trade for downside continuation has this level first, then this one, then this one, then this one, and ultimate destination I would say maybe the 4500, and taking some prints, some single prints out here. If the market takes this low out, and there's some activity that I would expect around the 4500, which right now is very weak, and below this level there is absolutely nothing that can offer any kind of support for any kind of break. Now, until that happens, let's keep monitoring the market. All this movement came from seller here. And this is the thing about trader, right? To see this movement, to see how the market, to see the dynamics of the market, there's a lot of information we need to be aware of. Now, what the market is doing in the daily time frame, what are the conditions of the inventory, what happened the previous day, what happened the day previous to that one. We may have some, you know, maybe 3, 4, 5, 6, up to maybe 7 to 9 days here before there's a resolution of this movement. There could be some balancing range here before we have an upside continuation or break. No? I'm not saying that's going to happen, all right? But because that didn't happen here. We have a break, we have 4 days here, right? 3 days and boom. Look at the balance that we have here. This was really nice. This was really nice. You know, buy the book here. Now, notice how the market is struggling here now. It's giving us some taper here, right? So if you got a trade here, you know, remember the innovators got here, right? Seller is the entry here. A mechanical trade, very mechanical trade. Low odds of success here. A rotational market. You know, and when we have a rotational market, notice how what's happening here. Notice what's happening here. Upside, downside. This is a rotational market. When we have rotational markets, you know, what I expect is maybe ones or twos, right? That's what I expect. One or two. If I got I don't expect more than that. Okay. We'll have now settle here. Downside continuation has taken this low out. Notice where the buying is coming from, right? Around the 12-minute mark, we have some push to the downside. Notice this low where it is, right? What I'm doing now is the market to the monitoring the market to the downside. Let's see how far this market pulls back. I wouldn't like the market taking settle, because that was the beginning of the trade here. Now, the relevant thing, what is the bigger picture here? What the bigger picture is? Okay, all these observations, you know, when if we want to take this business seriously, we need to do our own observations, right? Don't be afraid. You know, we do a lot of mistakes. We will do a lot of mistakes here. What's happening here in the daily time frame, for example, right? The daily time frame is the first one that is going to show change. You know, one time frame higher has ended here. You know, the market was going higher 1, 2, 3, 4 days. It was going higher. Now the trend to the upside has ended. There's no more, right? There's no more trend to the upside. No. The next thing I will expect is some rotation here, because it's rare that the market goes high and immediately goes lower. You know, those V shapes or inverted V shapes are not the norm. All right. I start to monitor the next thing. Monitor the weekly. We'll see if some buying appears around this level. You know, is okay. This is now becoming relevant. Could this be a place where the market? I mean, very mechanical, right? This is technical. You know, this is the technical part of the trade. Pullback. Well, the pullback was to last, right? Continuation, we'll see the market taking this low out, and next thing, overnight low. Now this level that was support now is resistance, right? The wider it gets early in the session, the lower the odds of the market is doing some damage in the lower side or the upper side. Also, ending directional move early in the session also increases the odds of rotation here. There's having some penetration here inside this area here, right? But still, now the thing is, this is the daily. Notice how it dries here. When it gets down here, it just dries here. Some bigger some blocks start to appear here. And somebody's buying bigger amounts here. Or somebody wants, not that it's buying bigger amounts, somebody wants me to see that they are buying. Okay, that's why I see this. Okay, when I see these things is because retail or short time frame traders will see this as a sign of strength. In this case, somebody's coming and buying. There are icebergs or whatever. All right. But if I am going to short the market, if I have a big position, or if I am going to buy the market, the last thing I want to do is anybody to know what I am doing, right? So if I see something, I question that. I use this to try to understand what the market is doing. Right? Now we have a weak high here, a weak low here. The upside movement took last, settled the distribution, previous day POC, and ended in this weak level, which actually weakens this level. The same kind of weakness that we have down here, And this is the thing, right? When you observe, when you try to understand, suddenly just makes sense. Okay? We saw in real time, okay, the first thing the market did here is change here. Okay, the volume, market was going higher and volume decreased. There was a decrease in volume. It went from -10 to -15, something like that. That was the first thing. As soon as C opened, that was the first thing. All right. The next thing, settle was taking a tempo change here. Tempo change here. My bad. That was the second thing. That was the third thing. The second thing was the buying coming exactly from halfback, from B halfback. Okay, this is the laggard stage of this trade. Tempo change here, and that was the short. Value, in the direction of value is overlapping to lower. I know the trend is higher, and that as soon we saw this also, the market was struggling around the center here. The first 7 usually is, in this market, usually is when there is some extension, and it happened, right? Then the next 14, there's a pullback. How far the pullback was? I guess the pullback was, around last summer, somewhere around here. It's another push. The next 14, the second push came at 14. It did not extend the market. The second push did not extend the market. It does start here. And now I want to see the last 7. I want to see if there is continuation, if there's another push to the downside. And location, this is a mechanical trade here. This is a mechanical trade. You have something here that will tell you that the market is telling me no. You know what? You're wrong. But why now? Why seller? Why I didn't take a trade from seller here, or a trade from seller here or here? Why here? Right? That's context. That's why this is called discretionary trading. You put momentum in context. Try to put market in context. That is the thing here. The one that we try to do here. All right, it is. Oh boy, it's 10:50. My God. Unless there's any questions, I guess I'm going to call it the day. And wish you guys a good rest of the day. Stay safe. Have a good trading day. Bye bye.